Well, hello there, hopeful investors. In today's video, I'm going to show you that even if you only have $5, you can start investing. Now let's dig in. Starting at the beginning of September, I created a recurrent investment in my small Robinhood brokerage account and started with $5 every day that the market was open. And I chose the Schwab US Dividend Equity ETF, or SCHD. And you can see here on the right, it is my top holding in terms of how much money I have invested, and I'm continuing to add $5 every day that the market is open. But now, why did I pick this company? Why did I pick SCHD? Well, I want to show you. To dig in a little deeper, let's pop on over to Seeking Alpha and see what the metrics look like. Now you can see in the last year, SCHD is down 11.15% in share price. Year to date, we're down 16.36%. You can see that we've got a nice yield of 3.59% right here, and we've got a dividend rate of $2.48 for every share that we own. SCHD pays us out quarterly, and the expense ratio is only 0.06%, which is really low for an ETF. Now let's look a little bit further and see what is actually held within this ETF, or this basket of stocks. Now you can see from the holdings breakdown here that there is a large percentage of SCHD that is invested into the financial sector with 20.61%, followed by the industrial sector at 16.32% and technology at 15.75%. And looking at the top 10 holdings of SCHD, you can see that Merck holds the number one spot, followed by Pfizer, Pepsi, Texas Instruments, International Business Machines, or IBM as we all know it, the Home Depot, Verizon Communications, Amgen, Coca-Cola, and Cisco Systems. And there's presently 104 different companies that make up this ETF. Now let's take a deeper dive into the dividend metrics of SCHD. And you can see that Seeking Alpha gives SCHD a dividend grade of an A+. The yield, it gets a B. Dividend growth rate is a C. Dividend growth rate right now is 11.08%, which I'm not really upset about. That's pretty fantastic if you ask me. The 5-year dividend growth rate is 12%, which is exceptional. And we've got 9 years of consistent dividend growth and 9 years of consistent dividend payments. So overall, some really solid dividend metrics for SCHD. In terms of the summary, here again, we can see that dividend yield is at 3.59%, an annual payout of $2.48 for each share that you own. That 5-year dividend growth rate, again reiterated, at 12.10%, which is fantastic, and that 9-year dividend growth. This company pays quarterly, so we can expect it to go ex-dividend again in December. So we're back in Robinhood, you guys, and I want to show you where you can set up a recurrent investment. So I'm going to go over to the Account tab, and I'm going to click on Recurring. And here you can see the recurring investments that I presently have set up. You can see I've got one set up for Hershey to buy $10 every week on Monday. And here's the ETF tab. We're now inside my recurrent investment that I'm making every day that the market is open, where I'm buying $5 worth of SCHD. So what you can see is that my very first order was placed back on September 6th. I did this right after Labor Day, and I paid a share price of $72.24. Now, if you look up here, you can see that SCHD's current price is $67.45. So had I bought everything I intended to in the month of September, all on September 6th, I would have paid that share price of $72.24. But instead, because I've been buying small bits, fractional shares every single day, my average price is actually $70.12. So in this example, it worked to my advantage, but the opposite could have happened, where I could have made that first order and SCHD was only $72.24, and then the next day and the next day and the next day, it just kept climbing and climbing. So to be fair, it can go either way. We don't have a crystal ball, you guys. Now, this will also show me the total amount that I invested over the last month. It will also show me the total that I invested last month and where I'm at month to date. So you can see that I've invested a total of $120, and I've now added 1.71 shares of SCHD to my Robinhood account since I started this experiment. What we need to consider is, where are we getting this $5 a day? How are we making this investment each day? Now, most of us are working a 9-to-5 job, very traditional. We probably weren't born into wealthy families, and we've got to work hard to provide for our families. So it can be really challenging after paying all the bills, making sure your family is fed, everybody has clothes, and they're healthy. What's left at the end of the month to invest? So that's why I wanted to share this with you all, because it's $5. Now, where can we find the $5? Now, I don't know about you all, but here at my house, we tend to eat a lot of our money. So if we just decided to not get the meal deal, if we didn't order the number 4, we'd have an extra $5 that we potentially can invest in something. We just have to start small. And it certainly looks like a yummy, delicious sandwich, but if we could forego it, we could find that additional $5 to invest. I don't know about you all, but I don't have $10,000 just sitting waiting to be invested. I've got to do little bits at a time. Many of you may have a 401k where a decided upon amount is pulled from your paycheck each week or every other week, however you're paid, and put into an account. And that is actually dollar cost averaging as well. And basically, this is according to Seeking Alpha, it's basically an investment strategy. You're making multiple purchases of an asset over a period of time, just like you're doing in your 401k, just like I've been doing in my Robinhood account. Now, there's long been an argument of whether or not dollar cost averaging or lump sum investing is the best way to go. And I'm not really here to argue either one or the other, but I just wanted to share some advantages of both with you so that you can decide what's going to work best for your investing strategies. With lump sum investing, you're getting in the market all at once. And we know that over the long haul, there is a potential for higher returns. It gets your money working for you right away. And if you have that lump sum to invest in the first place, you're likely more prepared to weather any risk that you might encounter. As a dividend investor, I might be missing out on those dividend opportunities if my investments are spread out too far over time. But I may not have a lump sum to invest right now, and maybe I'm worried about timing the market just right, so I can dollar cost average my way into a position. It strips the emotion, and I can just set it and forget it, just like I'm doing in Robinhood, or maybe, if you guys remember, like the Ronco Rotisserie of the 90s, set it and forget it.
To do a chicken, slide the spit rods through the chicken, put the gear wheel on, and put it in your showtime. Then set it and forget it.
Come on, who had one? I had one. I had a Ronco Rotisserie. Anyway, it allows you to have less worry about timing. And honestly, you guys, I can give you a great example of bad timing. I bought one share of Apple. I was super excited, you guys. I was like, I'm going to get in. I'm going to start a position in Apple. So look what I did. I bought when it was $172.14, and then it promptly fell in the days following to $140.02. So there's no time in the market. For me, it's about purchasing companies that I want to hold for the long haul. And yes, I'm using this as an example, but honestly, I'm not sweating it. My goal is to purchase companies that I believe in, that I trust are going to continue to grow over time. We all know we're in a downturn in the market right now, but I'm a dividend investor. I'm a buy and hold investor. So I'm going to continue to invest week over week, and in this case, day over day with my SCHD, so that I can create a passive income stream down the line and have dividends rolling in while I sleep. The bottom line here is I'm pretty comfortable to continue purchasing $5 of SCHD each day. So if we can forego the fancy coffee each day or keep our cars out of the drive-thru, that fraction of a share over time, it's going to pay us out in the long run. So my message is that even if you only have a little invest, just get started, because over time it's going to grow into something more significant. We all need to start somewhere, and I'm hopeful that after watching this, you might get started, even if on a smaller scale. Take a look at where I started this Robinhood account. I started just over a year ago, and you can see now I'm up to $4,500. And I started this account with only $50, and you can learn all about how I did that by clicking on this button right here and watch this video next.